PayPal co-founder Peter Thiel sat down with Maria Bartiromo in an exclusive interview on Fox Business, giving President Trump high praise for the tax reform that has put more money in the pockets of Americans. The entrepreneur also weighing in on Bitcoin, the impact of regulations on Silicon Valley, and the tariffs. Let's watch.
The tax plan and the rollback in regulations have definitely impacted the economy in a positive way. It's boosted things. We're talking about 3% economic growth this year, which is great. But he's getting pushback on this tariff story and trade. Where are you on that?
Well, I think even something like the tariffs, which are always, you're always supposed to be anti-tariff because you're always supposed to be reflexively pro-free trade. But I think that needs to be rethought as well. It's obvious that there's something wrong with our trade relations when they are this asymmetric. We import $475 billion a year from China. We export $100 billion. That's an incredible trade deficit. And the economic theory is that that the country, the developing country, should have trade deficits because it has the faster growing economy. And so capital should be flowing from the U.S. to invest in China. And then China should have trade deficits that offsets the flows. And we instead live in a world where the money is sort of strangely flowing uphill. The U.S., the slower growing economy, the developed country, has the trade deficits, and the investments are flowing from poor people in China into the U.S. economy. It's completely backwards. And so that tells us something's very, very strange in terms of the trade dynamics in our world. And then when you look at it, there are all kinds of different issues where there's very differential treatment. There's, intellectual property is not always respected. The U.S. has, and so to get to reasonable trade, it often is helpful to have people negotiating the trade treaties who are not too ideologically committed. Because if you're too ideological on free trade, you will say that it doesn't matter. Even if you negotiate a bad treaty, it's always better for everybody. And you actually want someone negotiating these treaties who's a little bit skeptical and who thinks, we have to negotiate the IP protection, we have to negotiate the taxes on different companies, the investment provisions. All these things have to be seen as part of a package deal.
You're right, and this number is incredible, $476 billion in terms of a deficit from China. This is why the White House is now readying a new program to put in place new tariffs against China, new restrictions for China, because they are trying to transfer our technology to China. What is your experience with China?
Well, my book 0 to 1 did incredibly well in China, so I've spent quite a bit of time there. I think they are doing a terrific job developing their country, growing their economy, but it certainly is a much less open economy than the U.S. is. And so, if we were to say that China is doing a lot of things well, then certainly on the trade side, if we were more like China, you'd be way beyond anything Trump is proposing.
Yeah,
and you have to always see these things as part of a negotiation where the goal is not to have massive tariffs on both sides. The goal is to get fair trade and open up both markets equally.
Yeah, I thought it was incredible that China has participated in 10% of all venture deals in the last 5 years in the U.S. So they are obviously looking at the innovation in America, trying to bring it to China.
But that's always the other side of the trade deficit with the U.S. So the capital flows to the money flows to China, and then it has to get reinvested in the U.S. So even though it's a good thing that they're investing, the reason it's happening is because of these enormous trade deficits. And so there's far more Chinese investment in the U.S. than U.S. investment in China.
That makes sense. Okay. Let me ask you about regulatory environment overall, because these technology companies that we talk about every day are more powerful than they ever have been. And now, for the first time in a long time, you're hearing lawmakers take notice and say, well, maybe the certain AGs in America want to focus on certain technology companies and the power that they have. And in Europe, you're seeing European Union leaders as well. Are you expecting we're going to see a heavier bite in terms of U.S. regulation on technology?
It's hard to say. I certainly think there is increased scrutiny. In the short to medium term, I'm much more worried about Western Europe, and certainly a part of the Western European dynamic is that these companies are all American. There have been very few successful technology companies built in Europe, and so it has sort of a vaguely protectionist, tariff-like feel in Europe. But it's also possible that we're going to be seeing somewhat more in the U.S. And I don't think the tech industry deserves to be massively regulated, but it is politically in a weak place. And one of the incredible mistakes that Silicon Valley has made is to become a one-party state. I think the banks did a lot of things wrong pre-2008, but they were very bipartisan. And so then the regulations that hit banking, were only moderate, considering the severity of the 2008 crash. And there's a risk that Silicon Valley will be regulated more than the banks, just because it's been politically so stupid.
Peter, can you talk to us about where the growth in the world is today? I mean, you have been able to really spot incredible trends throughout your career in terms of growth stories within technology. Where do you see the growth today?
Well, I'm always hesitant to give thematic answers. I always think it's specific companies that are doing, very unique, interesting, one-of-a-kind things. So I like to invest in companies that are doing something much better than anybody else, where if they weren't doing it, nobody would. And so it's a unique company that's developing a drug for an incurable disease, rather than sort of investing in a restaurant that's competing with 1,000 other restaurants in New York City. So it's always this stress on finding unique companies.
Anything strike you right now in terms of a unique company?
Well, the themes that I'm most focused on over the last year have been the cryptocurrency themes, and so I do think it's very hard to know where that's going to go. It's striking how much this has been missed in both Silicon Valley and New York City. It's striking how uniformly disliked it is, and perhaps things like Bitcoin have still a very long way to go. If it succeeds in becoming this internet cryptocurrency store of value, Bitcoin's worth about a little bit under $200 billion today. All the gold in the world is worth $8 trillion. And it could become the next gold. And so I think that's still the thing that one should pay very careful attention to.
Because when we were in Saudi Arabia, you said you were somewhat skeptical of cryptocurrencies, but you thought that Bitcoin was misunderstood.
I'm skeptical of the blockchain. I like the currency store value story, and the best one of those is Bitcoin. And so yeah, I'd be long Bitcoin, a little bit more, questioning about everything else. It is, of course, it has all these sort of 99, 2000 bubble-like aspects. But one thing that's very different from 99, 2000 is there are almost no Wall Street analysts pushing this. And so it is so out of favor.
It's true.
It is still so out of favor.
Final question here, Peter. Palantir obviously manages the infrastructure for data. Tell us about data and how you see data changing industries. I mean, several industries.
That's a broad question. I think that the critical issue is that is always it's not how to aggregate data and figure out all these interesting statistical things. That's sort of the big data story. I think the critical thing is always to find the kernel, the nugget, the really important thing in it. And so the anti-big data slogan we've come up with for Palantir is we need to make big data small, because we're all overwhelmed with data, and even though there's some statistical patterns one can find in it, the much more important thing is to turn the data into a few nuggets of really important things. So if you have a bank where you have millions of transactions, you want to find the few transactions that are fraudulent, and you have to sort of sift through this, find the needle in the haystack. That's in a way the problem with big data.
Peter, it's great to have you on the program. Thank you so much for joining us.
Thanks a lot.